Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock, SOFI Technologies SOFI stock, and Upstart UPST stock. We will begin by talking about Palantir's price target upgrade and their amazing future financial forecasts that were estimated by analysts, followed by why we should not pay attention to the bearish outlook on this company. Then we will discuss 3 reasons why investors are buying up SOFI stock right now and why their stock price has been upgraded by analysts. Lastly, we will briefly touch on Upstart to determine if this stock is a good buying opportunity right now. Go and press the like button right now if you want more Palantir, SOFI, or Upstart stock news updates. Comment down below which stock is your favorite out of these 3. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. You probably know that Palantir is a data mining, data analytics, and operating system developer for both commercial and government clients, but you may not have heard of how Palantir is now set to reach $38.81 due to their new projected free cash flow estimates. But before we jump into that, let's start off with Palantir's new projected revenues. According to analysts, Palantir's revenues will increase to $2 billion in 2022 and at $2.56 billion in 2023, which is fantastic news because Palantir has a 30% free cash flow margin metric, which means that they will bring in $768 million worth of free cash flow, which we can use to estimate our price target by using the standard 1% FCF yield. We simply have to divide 768 million by 1% to arrive at Palantir's projected market capitalization of $76.8 billion by 2023. This would represent around a 67% increase from Palantir's current market cap and stock price, which will give us the price prediction of $38.81, and that's going to be a fantastic price target, and I'll talk more about that later. Now, although the PLTR stock price may be trading sideways or even falling right now, the value of the company is still increasing even though the stock price is decreasing, which just provides us and long-term holders a better buying opportunity, either to add more of this stock to our portfolio or to get into the stock if you aren't already. Now, if you think the price prediction of $38.81 is low for a 2023 price target, that still represents an average annual return of 29.54% annually for 2 years, which beats the average returns of all the major indexes like the S&P 500. So these are significant returns for long-term investors, which means now may be a good time to either scoop up more shares or determine not to buy because you are already too overexposed to a single stock. Palantir is a company that has dependable growth and stable free cash flows, which to me makes this company worth owning or at least looking further into. By the end of 2021, Palantir is supposed to bring in a whole $1.53 billion. However, I think it will bring in slightly more than that estimate. Palantir has beaten their earnings forecasts by analysts time and time again, and I think for the next few years, we could see many more earnings beats due to their consistent revenues from government contracts as well as large commercial enterprises. I'm excited to see that the CFA and the author of this article, along with some analysts, are agreeing with me that Palantir has safety in their government contracts due to their sticky software, but their true revenue builder and value is actually going to come from their commercial segment. Just listen to this. In quarter 3, Palantir increased their business revenue by 37% to $174 million, which beats the estimate by analysts of $148.6 million. And year over year, Palantir increased their commercial revenues by 103%, and this year they have increased their commercial client base by 135%. So these are staggering numbers, and it's only a matter of time before their commercial revenue becomes their main moneymaker. The bottom line is that Palantir has very strong financials, which includes Palantir Technology having around $2.3 billion worth of cash or cash equivalents on their balance sheet and no debt, which should really excite investors because I think Palantir is going to be a major player in big data. Now let's talk about SOFI Technologies, ticker symbol SOFI, and 3 reasons why investors are loading up on the stock. First off, SOFI has produced 5 quarters in a row where they brought in positive EBITDA, which stands for earnings before interest, tax, depreciation, and amortization, which is extremely good news for the company and their stock price. SOFI has been growing their customer base at an astonishing rate because their members have grown by 96% year over year by adding 377,000 new members, and as you can see from the graph on screen, that is absolutely amazing, and we see this great positive positive slope that should continue to slope upwards for the next few quarters according to modern projections and estimates. The CEO of SOFI seems to be extraordinarily excited about the company's performance because he says this, and I quote, "I believe we have accomplished more at SOFI across our uniquely diversified platform of mobile-first financial services products over the past year than many other companies will achieve in a lifetime," end quote. And honestly, I totally agree with them. SOFI has positioned themselves to literally put their finger in every pie of the financial market, which exposes them to a huge addressable market. The article goes on to say this, and I quote, "Regarding guidance, the management team expects growth acceleration in Q4 with revenues up between 49% and 55% and EBITDA of $2 million to $5 million. This was yet another data point supporting the growth story that SOFI bulls had probably been looking for," end quote. As you probably already know, they also acquired Galileo, which is actually why I bought into this company. SOFI Technologies acquired Galileo in a $1.2 billion deal, which has paid off handsomely for SOFI because Galileo accounts have been increasing at an extraordinary rate to where they have reached 89 million accounts, and again, we see this beautiful positive slope that should continue to trend upward. But by far, many people are waiting on a huge SOFI catalyst, which is their bank charter, which will enable SOFI to accept client deposits just like a regular bank. And SOFI has already announced its agreement to acquire Golden Pacific Bancorp, which just puts them one step closer to this, and the article quotes, "We believe that by pursuing a national bank charter, we will be able to help even more people get their money right with enhanced value and more products and services," says their CEO. The article says this will help SOFI expand their ability to lend, it will lower their cost of capital, SOFI will have less reliance on other financial institutions, and they will have better loan margins. Also, SOFI stock has been upgraded to a stock price prediction of $30 per share, which is also amazing news, and the reason for this price target upgrade was due to their earnings report numbers, which showed great growth in new customers, as well as great momentum, especially when it comes to their products and their demands for them. To add on even more good news, the number of analysts that used to cover this stock has increased since July, when only 2 analysts covered the stock, which they both gave it a moderate buy rating. However, now according to analysts that were surveyed by TipRanks, 6 analysts in total covered the stock that were surveyed, and 5 of them say that SOFI is a buy, and 1 says to hold it. The analysts' price targets range from $19 per share on the low end and $30 per share on the high end, but with the stock's fair value price coming in at around $22 per share, if your average cost for the stock is below that, then I would say you are in a pretty good position. We should also keep our eye on Upstart, stock ticker symbol UPST, which is a company that uses AI technology to determine who lenders should lend money to instead of the traditional route of determining who can get low interest loans, which is mostly dictated by credit score. This company looks great because in the second quarter, its revenues grew by 1,018%, and then it grew again by another 250% the next quarter, which is absolutely amazing. However, this has created a buying frenzy for the stock, which has recently pulled back and should definitely be at least on a watch list because the company is pulling in revenues left and right. And here's what I mean. The company initially projected to take in $500 million of revenue for the year, and then they upped that target to $600 million. Then they increased it again to $750 million, and now they are forecasting to bring in $800 million. When all is said and done, Upstart is a very rare hyper-growth stock, but if you buy it now, you are paying a lot of money and a huge premium for the stock because they are extremely overpriced compared to their earnings multiple of around 170. However, with that being said, they are a profitable company, which is amazing news, and they are scaling very nicely and very quickly because the company's earnings per share is set to be $1.52 per share for 2021, and by 2022, their EPS is set to be $3.61, which would represent a 560% increase from 2020. Now, I don't know where this stock is going in the short term, but I am keeping my eye on a good deal if this stock dips low enough, because I think the addressable market market of this company is astounding. But I want to hear your thoughts. Comment your thoughts down below in the comment section. Like this video right now, subscribe if you are new, and I will see you in the next YT video.